day. Ira Epstein of Linn Associates with your SPDR ETF wrap-up for this Thursday, February 25th, 2021. Well, they want you to believe that rising interest rates, the market can handle it and it's just part of what's going on. It's good for the economy. I want you to take a look behind me. It's a sea of red. Yeah, one market up on this whole board that we have, and it's GameStop. Whoa, but look at the range, 184.68 to 101, closing near the low. Just totally crazy action. So what really is going on is the market has to adjust. It has to roll out of stocks that were the COVID stocks that protected, be it the streaming companies and so on, into companies that gradually will benefit from coming out of this. That is the process you're going through. Is it healthy? Probably is for the market. The market was getting a little frothy. Are the fundamentals changing? No. If you watched my morning flash update, you saw that all the reports that are coming out are basically solid. We expect interest rates to go up. The Fed's not going to touch it for a bit. It wants inflation to come back. We saw today the Costco's raising salaries by $1 an hour, beating Target, Amazon, everybody else. Bit of a price war. Why? They want to keep their employees. They're expecting things to even pick up more. That's my guess. When you look at GameStop, the theories don't change. I don't care how wild the market is. You get up to a Bollinger Band, you have a problem. Here you did it. You stayed up for what? 72 hours, then went crashing back down in the market. So that's how I look at the events. That doesn't mean life always goes that way, but more times than not, when you base an algorithm that works in the concept of 95% of the time, the market will trade to the downside of a Bollinger Band, there's to the upside of the lower band, there's two bands. I pay attention. What about AMC? Got up to $11. Bollinger Band, 1090. Need I tell you? This is that spike. We know what Reddit did to the market, but you can't play for a Reddit event all the time. You got to be playing these as you look. The market's not stupid. It learned from the Reddit event. And from the Reddit event, other traders were stepping in and doing something on the other side of these. They weren't as scared. PAVE, I've been looking for the market to come up. It made the new highs I was looking for. Now what is it going to do? Okay, let's dissect the chart. Here's a chart of PAVE. The reason I've had this on, I happen to think that infrastructure is going to be a big play as the Biden administration gets past the COVID relief bill and then into the infrastructure bills. That's what I believe. Doesn't mean I'm right, but that's what my thought. So I'm looking at this market. I see that the market stalled right here. Then it made a lower low and began the process, higher highs, higher lows. The market went through the old high. Good. That was what I was expecting. Market's over the 18-day average of closes. What do you do with the 18-day? On any chart, it's your line in the sand. If the market's over it, I automatically have a bullish bias. Under it, a bearish bias. If you're up sharply from it or down sharply from it, I look for the market to go back to that number. That's what markets typically do. So that's my thought. What about where the resistance is? We had gotten up to the Bollinger Band, and I'll bring you to this. This is 2 days ago. This is Tuesday. Hadn't hit the Bollinger Band yesterday. You get up to the Bollinger Band yesterday. I said this is where I think the pros are taking money off the table now. This is today. The market from there down rather sharply. Doesn't have to break the trend, but that's where the pros step out. Now, will they step back in here? Well, you look at the embedded reading. That embedded reading was lost today. So my answer is no, they don't have to. When you lose an embedded reading, which is momentum on the slow stochastic built into the upside, and you pull the plug, the only day it can come back is the day after it loses it, and it's got to come back right away. So we'll see in the morning, but my guess is no. Generally speaking, closes under 79 sort of do the market in, especially when you close near the low of that day. It's how the formula works on the slow stochastics. So I can see that. It means more of a correction to me. We'll see what happens. THCX, okay? I look at this market that when you lost the embedded reading here, I was looking for the 18-day average. Now I can see patterns that are starting to develop that if you were to close over 2220, you could end up with higher lows, higher highs. Were the bears defending their position against the 18-day average of closes? Why? You already have the lower highs, lower lows. They'd be wrong if that was taken out. Now it'll be under that number. I don't like that. If you break the pattern under an 18-day average and just close over it, you got to be careful. So that high was 2179. 2220 is the 18-day average. You got about a 40-cent spread there. That's a lot. So we'll see what happens. You're also very oversold. I'll let somebody else play that game. I don't have to be a hero. SMH, as I've said, as much as I know that the Biden administration wants to do something for the market and from the semiconductors, we still have this pattern that we're dealing with, which has been lower highs, lower lows for a while. This isn't a new pattern. This developed here. Then you rallied back to the 18-day average. I think the pros actually went short against that. Stops over those highs. Did it take them out? No, you had that rally, and now the bears are in control again. If the market's going to drop down here, I'd look for the potential of the 230.04 area. Why? Because you're not oversold in that band. Where's the resistance? Back at the 18-day average, and 250.05 would be the number that stops this market from that downtrend. In XLI, what did you do yesterday? I teach you that the first time, not the second and third, the first time that you get a market that runs up to a Bollinger Band that's not in one of these tight ranges, okay? It's often a sign of a mini exhaustion, even if you've got a Bollinger embedded reading, because the pros will use that, and on the pullbacks until that's lost, which it was today, but typically it's not that way, they'd be buying the breaks. You lose it? Out. Let somebody else have it. Why'd the market carry? Momentum. What did it lose? Momentum. The energy sector. You've been running the upper Bollinger Band and not breaking. You have an embedded reading. It also isn't giving you much of a pullback one way or the other. There gets to be a point sometimes where you just say, okay, if I'm going to play the game on the breaks, maybe I don't carry the full position I normally would. And that's how I think the pros are going to look at this. I think they're still bullish. I still think they'll buy the break in the market. And I still look that they'll see, can they get back to that upper Bollinger Band? QQQ, oversold now. You've hit your downside target, you had a bounce, you hit it again. If you're going to break any further, look for the 100-day average. Now, when's the last time you hit that? Wow. You have to come back here to the very beginning of November. So we've had a sign of weakness. Why? Because these high-flying tech stocks, the ones that since a year ago, March, were the favorite darling of the markets due to COVID-19. There's money rotating away from them. That doesn't mean they're not good companies. You're not hearing me say that. That doesn't mean their earnings aren't going to be okay. Traders move money. Money's hot. And it moves to where they think the next event is going to happen. That's what's going on. To negate this downtrend, I think you'd have to take out, in fact, I know you'd have to take out 324.45. That would break the pattern of lower highs, lower lows, and no, I don't think you're going to attract new short money here because you're already oversold in the market. You also don't stay under the Bollinger Band more than 5% of the time. Emerging markets. Well, it tried today. It really did its job. Early on, the market got up to 76.69, saying, remember what we talked about? That could be where the market tries to find itself. The weight of the day took the market from opening, getting over that number and negating a downtrend, and carried it back to a lower low. So with today, if you take out today's high on either, in fact, a number of these markets, on either Friday or Monday, you create a bear trap. Until that's performed, you're not trending in this particular market. You have a higher high, lower low, battleground right here, momentum pointing down. In GLD, Gold has just been getting beat up. It can't win on an environment where you had low interest rates, and it's certainly not winning on one when you have higher interest rates. Do you disagree with me? That's fine if you do, but that's been the case. And that's not to say it didn't get up to that $2,000 level. It had a very good year, but on a relative basis, what did it do against something like a Bitcoin and Ethereum? I can go on and on. It didn't do that type of thing, but that's not what gold traditionally does. It's not the hot flyer. Keep that also there. So here you come down again, you're oversold. Each time we've broken, the Bollinger Band has held the market. Why should I think any different? And no, that's not a buy zone to go long, but it is for the bears an area where I think they'll cover some shorts. If that's happening there, why won't it happen in the gold miners? Oversold, same thing. Remember when this market rallied here, I said, okay, you're into the resistance area, and now you're back into the support area down here. Also, notice you had an outside day up on, what was that, Wednesday. Today's Thursday. Market took out the low of an outside day up. That is bearish. Now, how far deep it wants to go, I don't know, but they caught a new group of people that tried to buy the market. That's basically a bull trap. In TLT, the Gorilla Glue trade. And when that happens, you've heard me say it here over and over. You don't want to be a hero. It's not even rallying enough to let you get short on a little break. It just catches people that don't believe markets can keep doing this. Well, they can. When it ends, it ends. Do you want to be a seller on rallies? I don't think so. I think it's come down so much. If you're a bear and you've caught it, terrific. If not, you probably are going to look elsewhere. Euro currency, where did it fail? I want to take you to this. What do I teach here? The first challenge of an upper Bollinger Band or a lower one is where I think the pro-money steps away. Now, they could do it, all of it, a chunk of it. I can't tell you that part, but that's what I'd expect. So if you go up to that number, I always say here, in unison, what do you think they did? And that's what I'm saying. You're overbought, you hit an upside target, the trend is up, but I think a lot of money just stepped out and said, hold on, I want to wait and see. That's what I think is going on. I have a favor to ask of all of you as I end this. No ad today. If you like these videos, could you do me a favor? Hit like on YouTube. That's all I'm asking. I'm Ira Epstein. I'll see you tomorrow.